The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I posted the chart of Amazon and gold here. I wanted to explain what those charts are in just a little bit. I have to tell you an interesting story. As most of you know, one of my very dear friends from 50 years ago is Jim Twentyman, and Jim is from Upper New York, a little town called Homer. And one of his neighboring cities is where Jim Boeheim, the coach of the Syracuse Orangemen went to school, so they're the same age, and they played against each other, for 4 years, all through high school. So Jim is really a big, strong supporter of the Orangemen. Of course, they were playing against the Virginia team, and yesterday in the NCAA tournament, and Jim and I are working on a special thing for gold, and so we were chatting several times during the day, and I like NCAA basketball because it can be very exciting at times. And in the second half, Syracuse was down by 17 points with about 12 minutes to go, and they were playing terribly. They couldn't do anything right. And it was in the second half, and Jim said, I just can't take it anymore. He said, I'm going to get on my bike and just, go for a bike ride. He rides these marathon, he gets on the bike and he goes for 35 miles. And it doesn't even have a motor on the bike, if you can believe that. But anyway, about 6:30, he called me back to talk to me about gold and converting it from from just U.S. dollars to euros and Korean won and stuff like that to see what the difference in price was, on the charts based on the various currencies. And he said, I'm really embarrassed about the way they played. And I realized when he was talking to me that he didn't know that Syracuse came back and absolutely blew the game away and won by 8 points. He didn't know that, and so I had to string it along, and I said, it's really amazing how bad they played that first half, and he said, it's just too bad. And I kept going on and on about some of the players and stuff, and I said, Jim, do you ever get the final score? He said, no. He said, I was afraid to ask. I said, why don't you check it and call me back? So he checked it and he called me back, and with some expletive words that I can't say here on TFNN, he said, what happened? And I said, well, they just got good defense, and the other team couldn't score, and they started racking it up, and that was pretty much it. They had a run where they outscored them 29-8. That's almost unheard of for a number one ranked team, but that's what's happened. Let's get on to the markets. The first chart that I've focused on here, this is what we were doing when we were in Hong Kong for our trading seminar that we had there last in the end of March. And what we do is we had a nice crowd there, and it was tough for me because we were following Larry Williams. He had been there the month before, and Larry is really a fantastic speaker, fantastic trader, a class act, a really good guy, and again, a good friend, but he's really tough to follow because he's very funny, and he's also a magician, so he can entertain anybody. But what we try to do is we teach the patterns that we're looking at, and I try to focus on just two, like the Gartley or the ABCD pattern. And this was one of the trades that we had set up. The actual trading was for Monday following the 19th, so that would have been the 22nd of March. And of course, the trading gods were sort of smiling on us because the Amazon opened about $2 lower to get our price at $5.40, and it immediately took off and had a huge run. And they were buying options, and so the options were really a tremendous move because of the leverage that they had. But the interesting one is the chart on the right, and that's the gold chart that goes back over the last 3 or 4 weeks. As you can see, we were looking at this big ABCD pattern, and we were actually shorting this on the 22nd when it got up to the 1260 level. That was a 61% retracement, and we were looking for a target of 1212. And of course, we hit 1212 last night. In fact, we went all the way down to 1206. And if you look closely on that chart, I didn't highlight it because I'd already did this before the price hit that last night. But you'll notice that the 1.618 expansion of that last move came in at 1206.4. And I noticed our good friend Mr. Z in the room today was recommending buying gold on a stop at 1212 and change. And of course, it rallied $10 from that level. And I think this is a pretty good rally in gold. I'd like to see it get up to around somewhere around that 1250 area. Would be a really good spot where I'd like to see gold get to. Folks, there's a really good chance here, and I'm saying chance in the loosest possible way, that we might have made a major gold low. There's a slight chance of it. I think it's in the neighborhood of about 25%. The reason for it, I don't want to go into because it would take up the whole show, but we're starting to see signs that there could be something, really dramatic going on here in the gold market. However, if we get below 1150, that is not going to be the case. So we need to hold somewhere around that 1190 area. 1190 area would be absolutely perfect because that would be a really key spot to look at. What we've done so far in the gold is, in early March when we hit that 1276 the first time, we backed off to 1190. We backed off, $74 an ounce, and this time we backed off a little bit more than that. We had a high of 1286. We had a low of 1206 last night, so we backed off 80 points. So it's very close. First one was 74 points. The second one was 84 points. Now, what's interesting about this is that silver is up, even though it's backing off quite a bit, is still not backing off near as much as the gold. So we're watching these in tandem because the ratio of gold and silver is about as high as it's ever get. It's about 80-1, and that's a very unusual event. Usually it runs around 16 to 20 to 1, as I recall. But we'll keep an eye on that also because it's going to be real interesting here these next 2 or 3 weeks in the gold market, because if we have this correction that is continuing to go down here, we want to see how well it holds these support points that we come down here. And what we're doing is we're watching historically what's happened when we've had these bear markets in gold. And this has been one of the, the worst one, of course, was 1980 down to 2002. We were down for 22 years in a bear market in gold. We went from 863 on January 20th, 1980, all the way down to the 256 level in 2001. 2002, I believe, was the low in gold at around 252, per ounce. So we're watching the historical significance of that. And then since it's been in this, it was in a 12-year bull market till we topped in 2011. 9-year market. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, now we're going to take a look at a chart that was furnished to us by our good friend Jim Bartolione of V50 Partners. And what I wanted to show you here is the harmony that you see on this gold chart. You'll see these 5 blue arrows labeled A, B, 2, and then 3. This is Jim likes to do Elliott wave counting, and he's very good at it, but it just shows the relationships of these waves and how similar they are. And what we're watching now is the fact that we've had this big run-up of $220 per ounce over a 8-week period, and got everybody excited in the gold market, including this old cowboy. And so what we're going to see now is what occurs here on this little bit of a pullback that we're looking at right now. So far it's $80. My guess is we might come down. The last move down was $74, and we might do 1.27 of that. That would take us down to about that 1190 to 1185 level if we get to that level. But there's a lot of things going on, not just on this long-term weekly chart, but on charts that go back even farther than that of what we're watching. And what we're watching within that are the smaller patterns that occurred during these long periods of a bear market. There haven't been much, from 2011, to where we are now. We've been in a 4.5-year bear market, which is one of the longer ones, but not nearly as bad as that 20-year market bear low that we had at 252. So we want to watch this very closely here these next few weeks to see what happens. I do believe very strongly if we get above $1,300 an ounce, I believe we got a chance to take out that high at 1190. The reason why I say that is the work that Twentyman has been looking at and has been kind enough to share it with me to see what's happened to gold when something like this has happened over a extended period of market action, and that's what we're watching. They go back a long way. If you'll take a look at this chart that was furnished to us also by Jimmy B, you'll take a look at this, that this goes back to 1913. I think that was a year after I was born. And if you look at this, this was actually 1913, if you remember, was the Jekyll's Island. That's where the beginning of the Federal Reserve, which was the third U.S. bank, I think is what it was. We hadn't had a Federal Reserve Bank in, I think, about 50 years until 1913. And that's when we came out with, it was on Christmas Eve that they passed the bill. There was only about just barely enough people to pass the bill in Congress. And so that's what's happened. And anyway, there's a book about it called The Creature of Jekyll's Island, which is quite good. But anyway, gold was trading at $20.67 in 1913. And of course, it was pegged at 1932 for many, many years. And this is what the chart looks like on a very, very long-term basis. And as you can see, there's some similarities in corrections of what we're looking at here. So we'll watch this unfold over a period of time and watch it. Now, I have some interesting news here, and that is we've got a really nice guest. One of our favorite people is going to be here on let's see, on Wednesday. That's Bill Meridian of Cycles Research is going to be here, and he's always given us some great information, and it's really quite good. I noticed that some of the folks in the chat room today here at TFNN are talking about the movie The Big Short with Brad Pitt, and I think you should watch that movie. It's extremely well done. I think it's chronologically correct and historically correct and factually correct. I could find very little that I could see that was wrong with it. I mean, they didn't usually these writers blow things completely out of proportion, but this one looked really pretty much spot on. So it's a great movie to watch about the financial markets. We had some of those, of course, in 2008, if you'll remember, when the market was in that the financial panic where we had to bail out our poor little banks. Now, if you'll take a look at the silver chart, I've posted it in here, you'll be able to see that it's holding up very nicely. Last night we got down to about $15 and I think 5 cents per ounce. We were looking for it to come possibly down to $14.60. That's the area where I would like to see silver get to, and if we get gold down there at the same time, this would be further evidence that maybe there's a new bull leg coming in this level. If you notice, that area of 1460 was the low that we had in late February. That was a perfect 61% retracement of the move from the downside. Folks, let me mention to you about these ratios that we look at here. You know, I try to only look at 4 ratios. Sometimes I look at a few others if they all come together, but I look at 618 and 786 are contracting ratios, and 1.27 and 1.618 are expanding ratios. And then I look at the ABCD patterns to see, you know, if they line up with that. I have to keep it really simple. I'm not able to do Elliott wave counting. John Hill and I looked at that stuff way back in 1970. For a whole year we watched it, and we both were confused on how to do wave counting. Prechter came out, I believe, in 75 or 76, and came out with his Elliott wave and became incredibly popular, and it's just been exploding ever since that time. And there's so many people out there. A lot of books have been written about it, and these guys do these amazing time counts. And I just don't understand how they get them, and I just over my head. It's just beyond this old cowboy's pay grade. That's all I can say. However, we have to be getting back to the gold and silver. If this thing gets below those levels, below 1460 in the silver and below 1150 in the gold, then there's something totally wrong. It should not do that if this is going to be a bull market. It's that simple. Now, what we're waiting for is to see if we test that final level of 1190. I think what we're having now is a good bounce, and we should rally at least $34 off the bottom, so that should get us up to 1240. If we get to 1240 in 1 or 2 days, then maybe that was the major bottom in here, but frankly we'll have to just let the market tell us that. But the first level to watch would be the 1240 level. That would be really close to the 61% retracement of the last move down from the 1260 1262 level. So it's just not the gold, folks. It's the gold mining stocks that are interesting, and it's also the XAU is also in a very interesting spot. Technically, it's done this 3 times before. Whether this is going to be the 4th time or not, I'm not sure, but we'll have to wait and see. I'm trying to set up a small, short webinar of, say, half hour to maybe a little bit longer to go through some of this stuff for our folks here at TFNN. If we can work this out with Tommy and Tom, we'll try to get that for you as soon as possible, because I think the time is going to be short here, probably within a week or two, if in fact that is the most thing of what we're looking at. So we'll see how this is going to go on. One of the things we really need to focus on is how gold is priced. I see Steve Rhodes just posting things about euro and the gold, and that's very, very important for how you do this. Anyway, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are going to have Bill Meridian from Cycles Research on as our guest. on Wednesday. So please try to listen to that show, because he is really one of our favorite guests and does so much wonderful research. Bill happens to be not only a fantastic technician, but he also is one of the very best financial astrologers on this planet. Now let's get into the stock market, and we'll take a look at what we're looking at here. First of all, we're going to take a look at the New York Stock Exchange Index, is the one we like the best. If we look at our top that we made back on May 19th, when we had another financial astrologer, Norm Winsky of Astro Trends, on, alerting us to the new moon and the Mercury going retrograde at that time. And you'll notice we've had we've had two lower tops. That's the 135 pattern. The high that we made on the 22nd of March, which was the lunar eclipse and full moon, was an exact to the tick of the 786 retracement of the high that we made back in late October, early November. I believe it was November 1st when that high came in. These were almost perfectly symmetrical moves, as you can see here, and that's how these channel and parallel lines are built. That's why the market is chaotic, but it is non-random. Within this chaos are non-random patterns that repeat over and over again. This has been proved by Dr. Andrew Lowe from MIT in his book, The Non-Random Walk Down Wall Street, and also his book on the evolution of technical analysis, where he spends the first 50 pages of that book talking about astrology, because he goes back to the Babylonians and the Sumerians and how they used the moon and Mercury for wheat and other things. And I don't know if they had financial markets back. Maybe they had the S&P back then, because the devil was always around at that time. So maybe that's the case. Anyway, folks, this is a bear market rally. I mean, you don't have to be a PhD in economics. You don't have to have a Nobel Prize. But if you look at this, the trend is down. You've got lower tops. You've got lower bottoms. That's a bear market. If we take those highs out from last week that we made on March the 22nd, then you've got a chance for this market to go higher. But right now, this thing is just set up as perfect as you could possibly get for a market to do that. And so you certainly have to respect that. If we take a look at the transportation index, which has gotten a lot of press here lately, you'll notice here that we topped here back in 2014, way back in November. And since that time, we've had 1, 2, 3, 4 Gartley sell patterns. And if you count this last one, which is difficult to count as a Gartley because there's no BC swing in the move, it's just a straight retracement. The high that we made on the 22nd of March was exactly, again, to the tick at 8,121. That was the price that we hit on the transportation index. That happened to be the exact 61% retracement of the high from way back in October of 2014. I don't know about you, but that should mean something if you like Fibonacci numbers, and this old cowboy certainly does. And anyway, watch this very closely for several reasons, because if we get above that number, that tells us that I should get a job, slicing beef at una carniceria, which is the Mexican version of a butcher shop, because this thing would go a lot higher if we take out those highs of March 22nd. That's the way it would look like should we do that. But until that time, it looks like we're heading down in some aspects. I think quite a bit. Now I wanted to also show you the S&P cash, because this was very similar to what's happening to the futures market. You'll notice that we have that same type of ABCD type symmetry when you look at the move between August 24th and October 31st, and you're also seeing the same move from January 20th all the way up to where we were on the 22nd. So this is, as long as we don't get above that high of the 22nd of March, we have a possibility of a move to the downside. Now, we were down a little bit on Friday, and then last night with the Japanese finance minister coming out and saying that they were going to, in fact is, if you got children, folks, get them to move to Japan. They got a good deal over there for the kids. They're going to give them vouchers so that they can go out and spend money in order to stimulate the economy. My kids never needed those vouchers. They just went ahead and spent. But the government's going to give them it's going to give them money to go out and buy things to stimulate the economy. Now, I certainly hope Obama doesn't hear about this, because that might be another package that maybe Yellen and the group might get together, is to give our young people some more money so they can just go out and spend more. Makes such good sense, and especially since they don't have to pay it back because we have near zero interest rates. What a world we live in. You can't ask for anything, better than that. That's the bottom line from the cheap seats. I wanted to share with you one other pattern that we have that we've talked about before, and that is the crude oil market, because, we had the big 3 drive to a bottom pattern, way back here in January. We made a double bottom, of course, and now we've rallied up to a 61% retracement of the high. It was also a 382 retracement of the high from last May. That's a real critical level, because, if we get above that, we'll be looking at around $50 a barrel. Folks, here in Tucson, Arizona, when I left for Hong Kong, I was gone a couple weeks, gas was selling at $1.13 a gallon for gasoline. Now gasoline here in Tucson is at $1.95. It's rallied 82 cents. That's an almost 80% rally in gasoline in 2 weeks. Now, the gasoline futures never did anything like that at all. They rallied 35 cents. So you can probably figure this out easily, that it's probably some type of a distribution problem here that we're having in Tucson with either oversupply or undersupply. But to see it move that much is really quite amazing. As long as the crude does not get above $42 a barrel, we've got a chance for this to sell off to hopefully, and I hate to use that word because that's a terrible trading word, hopefully, but if we can get it down to around $32 a barrel, which would be a 61% retracement, and do it in a Gartley format, I think that would probably be one of the widows and orphans trades, because we've had this tremendous amount of bearishness in the market. We've had the 3 drive to a bottom pattern, and now if we could just get a Gartley pattern to form after this, you'd have a perfectly technical picture for the market to have a really, really big move to the upside. So that's what we would be watching here as we go through and look at some of these things, because I think the oil has got a chance for a really substantial rally in here, and just because of the fact that it is so bearish on a worldwide basis, everybody thinks that oil is going to go even lower. There's a few people out there, but we want to watch the pattern here to see what this pullback is going to be, if it's going to hold that level. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we've had a question from one of our listeners about the Dow Jones Utilities, because on the weekly basis, which I've just posted into Tiger TV, you'll see that it is marginally taken out the high that we made back in 2014. Actually, it was early. Yeah, it was 2014. We did exactly that same thing. If you'll look at the time period in 2007 and 2008, we did the same thing with utilities. We took the high out by just not even 1%. It was just basically a marginal new high, and then we collapsed into the too big to fail debacle that we had here. But this one has done pretty much the same thing, and part of that reasoning, I believe, is because of the utilities are so sensitive to their dividends, and with interest rates at near zero, and there are below zero in some countries, people are in search of higher yield, and so they'll pay up to buy these utility stocks just to get a higher yield on their investment. And it brings us back to the old adage by Bernard Baruch from his autobiography, My Own Story: don't be concerned on the return on your money, be concerned on the return of your money. In other words, make sure you always get your principal back. That's the key of some of the things that we're looking at. I've had another question about the gold and silver, what's going to happen, and frankly, I don't know. All I'm watching is the swings as they're unfolding, and that's so far it's done what we thought it was going to do. We thought it would get down here to this 212, 210 area, which it's certainly done that. We're getting a small bounce, of course. So far, we've rallied about $17 an ounce, which is one of the harmonic numbers in gold. But I believe we could get easily to 1240 to 1250 on this run, and then we'll see if we can back off one more time and maybe make a third drive in the gold down around the 1190 area. If we were 3 or 4 weeks into this correction, and we're not. We're only 2 weeks into the correction. I'd like to see a correction of at least 3 or 4 weeks. And of course, what I like and what the market likes can be a whole big difference. So we have to be very, very aware of that also. So we want to keep an eye on this real closely in the gold, because it's got a chance, and that's all it is, a chance. And right now, I'd figure to be around 25%, and we'll see if that's going to if that's going to mean anything or not. Now, I wanted to bring up one other thing, and that is the Treasury bonds, because there's a possibility here when you look at rallies and how they unfold. If we look here at the daily Treasury bond chart, you'll be able to see that we had this big butterfly pattern form up at the area of 170. Then we had a really strong breakdown into the 160 level. And since that time, we've rallied for 2 weeks. And all we've been able to do, and in fact, we haven't even hit the 382 retracement of this move, which is about a point higher than where we're trading now, up around the 164 level. If we only get above that this week, if we stay right around 164 this week and then start down, this would be a very, very bearish pattern. This would be a ABCD pattern at a 382 Gartley, which is extremely bearish, and you don't have to wait very long to see if it's going to be right, because if that pattern is correct and we only hit 164 and then we come down and break below 161, that sets up price objective of 154, as you can see here on this chart. That would be higher bottoms going back to June of last year and December of this year. So, but that's a pretty substantial move in bonds from the 161 level down to the 154 level. That's 7 handles. That's 7 large. That's a lot of money. So you want to pay close attention to the bond market at 164, which is the 382 of the high from February, and then it's also the ABCD pattern of that move. So that'll be interesting also. And then also on the downside, watch the 161 level. That's another key level that needs to be picked out pretty good. I'm working on getting another guest, Ralph Vince, who's one of the best people for, not one of the best, he is the best for looking at money management and how to maximize, your positions and stuff. I'm trying to get him as a guest, but we'll have to wait and see if I'm able to do that. But we will have what his name? Excuse me. We will have Bill Meridian on Wednesday. By the way, you guys, I don't know when Norm was on, when Norm Winsky was on last week. If you remember, we had him on the 23rd because we had this solar eclipse and stuff, and the lunar eclipse and the full moon. But one of the things that he focused about was sugar, and sugar had a 5% drop that day. That's a huge move in sugar on the downside, and he forwarded one of his charts and showed that it was within 8 minutes of the exact time of that astrological event occurring. Unfortunately, I lost it in my program during the travel, but I will get it back and share that with you later on this week to show you that was in, I think it was within 8 minutes of the exact astrological event that occurred at that time. So we'll be watching it closely in the sugar. Even though I haven't traded in sugar in probably 5 or 6 years. Used to be a really good trade. I'm sure it still is, but I just don't have the time or effort to to look at it very much. I'm so busy with the currencies, the gold and silver and soybeans and corn and wheat and all that stuff. It just doesn't give me enough time to look at the softs, and I don't really like the softs from just bad experiences that I had, 40 years ago. And I don't want to go through it again, so I don't need it, don't want it, won't do it. Okay, now I'd like to mention one other guest that we're going to have, hopefully by the next in the next month, sometime during the month of April, is to have Larry Williams on, because he's one of the best folks in this business as far as the things that he's given to this business. He's been around forever. And I've known him since 1965, so that's what, 51 years. And he lives down in St. Croix in the Virgin Islands, lives a very incredible lifestyle. He's a great guy. He's very, very philanthropic, and boy, he really knows the markets, very, very well. He's an incredible incredible guest, and he's very, very informative, and he's incredibly humble. Of course, his humility came at a price, as we all have paid through the years. But he's a very humble person, and he's really good at what he does. We're going to try to have him on also, and also we'll have Rich Anderson on again. I'm trying to get Rich on a regular basis because we're into the growing season now. Some of the crops in the Midwest have already been planted because the weather, broke really warm here, and so some of the farmers were able to get their stuff in. But starting here this next week, there's going to be full-scale planting, and we really need to watch that because the gold, the soybeans, wheat, and also the corn are starting to turn up. And, especially in that new crop corn, it's made a pretty nice 3-drive to a bottom pattern, and we want to keep a really close eye on that one. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we've got a caller from Boston. Jay, are you there?
Yes, I am. Good morning, Larry.
Good morning to you.
Yeah, I was thinking of you. I read an article about a week ago in Market Watch, on the Market Watch website, and it's an analyst, a technical analyst, a pattern trader named of Avi Gilbert. and he's a big Elliott wave guy. And he read an article saying that back in 2000, a recent article on MarketWatch, and that said buying gold now is analogous to buying stocks back in 2009. And so he took a closer look, and he said, "No, I don't think so." He said, "I think that buying gold now is analogous to buying stocks back in 1941 when the Dow was hovering around 100, and it has since gone up by a multiple of 150 to 180." He says it's the third wave of the Elliott pattern that concludes all metals, and particularly gold. And in fact, I emailed this article to you so you get to peruse it and see what you think. But any thoughts about this?
Well, I don't. I've had a hard time counting the waves because I have some good friends, Bryce Gilmore and Bob Miner, who are expert Elliott guys, and they'll be sitting in my office arguing about whether it's a 3 or a 5, and I'm in there trading it because all I'm interested in is trying to take a buck out of the market. So I'm not concerned about these intricate waves that they have, but I do believe that the market moves in those waves. It's a question of how you count them. When Elliott came out back in the 30s, he didn't use the square roots of the numbers. He never used, 1.27. He never used 786. And it's important to use those because that helps, understand what some of these swings are doing. And so that's what I really try to do, is to match up a pattern with a swing. And I don't care what the label is on it. If I have several ratios present, I'm going to do the trade. That's pretty much the bottom line.
Yeah.
Hey, thanks for calling in, Jay, and I'll respond to your email after the show, okay?
All right, good stuff. Thanks, Laurie.
Yeah, thanks for calling in. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.